Okay, welcome everybody. It's Friday and it is the weekend video. It's 4 o'clock here in Ireland, so the UK market is just about closing and it's time to do a video. I have switched around some counts today, obviously, since that's what you're looking at. This is the euro dollar count. Nothing has changed apart from the degree at which I'm working it right now. So, this used to be labeled 1 degree lower as wave 1 and 2 in blue, and now we've switched up the degree by one level, and now it's 1 and 2 in red brackets, so you can see that there. So what we're working with really here is wave 1 2 1 2, possible 1 2 1 2, so it could be 4 degrees of 1 2 waves with the caveat of that alternate count there for wave 2. So this is the 4-hour chart. Oh yeah, by the way, how are you? I hope you're doing well. Yeah, I'm pretty happy today. It's good. Okay, so I was told to be, I was given a polite advice to be more upbeat and chirpy and stop acting like I'm talking to myself, which is quite hard to do when you're talking to yourself. So I'm going to try and stop acting like I'm talking to myself, even though what I'm doing is talking to myself. So here we go. So yeah, that's that 1 2 pattern. 1 2 in red, 1 2 in blue, 1 2 in green, and maybe a 1 2 in brown. The most glaring kind of fact about the pattern right now is the upside all looks corrective. And so we've got 5 waves here. That's a wedge pattern, wave 1. The upside is, I think that was triple combination. Wave 2, we had a nice impulse of 5 waves lower in wave 1. 3 waves up in wave 2. Got a 5 wave move lower in wave 1. A corrective move up, most likely 3 waves in wave 2, unless this expands further into a type of flat, which is something I'll get into in a second. Or we switch out onto this alternate count here for another lower high in a larger wave 2 blue. So the alternate count has always been for this kind of sideways action off the November lows, for this action to kind of expand or into a larger second wave, and the possibility is still there. So let's get down to the hourly chart. Oh, but by the way, if this particular count holds, well, then we are in scream and sell mode right now for euro dollar. Given a couple of caveats, so we'll get into that now. The hourly chart. So here you can see those wave 1 2 in green, wave 1 2 in brown, and now what we want to see is 5 waves down again to complete the lower degree, wave 1 and 2 in pink. So we could have that. There's no real way to interpret this move off the recent low as a bullish move. I was calling it an expanded flat, but I've changed today and shown an extended third wave with a kind of running flat fourth wave and a dip down into wave 5 at the recent low there. So that 112.33 now becomes, and more importantly, the lower low there, 112.15. So that was the previous wave 1 low there. We have a little band of support with a lot of a kind of heavy weight of meaning over it. So if we get 5 waves down again, an impulse pattern off that wave 2 high, so 5 waves lower and 3 waves up to create a further lower high, well then we are looking at a pretty serious setup for euro dollar and for the euro in general. Okay, so that's next week. That's the outlook, is again to complete this. I think we're more or less complete now, this second wave, and to move lower in 5 waves again. We could have a 1 2 again on at a small degree there, whatever you want to call it, a minuet degree, sub-minuet degree. 1 2 pattern off that high, and we move lower in 5 waves. So on Monday, then we would look for a break in a possible third wave 3 of 1, and a break of that 113.14. And the reason I pick out that 113.14 is we this is most likely a B wave low. So we have 3 waves up in A, a kind of a flat B wave there, and then probably a 3 wave pattern up in C, so a double combination B wave there. And the break of the B waves is a pretty general kind of point of confirmation, or a signal point in Elliott wave. Then you'd probably use that at 113 level again as resistance then in wave 2. So next week we'll look for 5 waves down, 3 waves up, give us a pretty clear bearish signal for euro dollar. Okay. Pound dollar, again, we've changed the short-term count here this week. We've got 3 waves up in A, a large kind of running flat pattern wave B, and a 3 wave. I think you could count this both ways, but the fact that these kind of 2 internal moves here seem to be pretty equidistant, you could pretty much call that a 3 wave A, and then a 3 wave B, and then a move higher in 5 waves. This move here in wave C looks more kind of traditionally a more traditional 5 wave look on it. Now we have moved off that high in a 3 wave pattern. It looks like a very corrective pattern anyway. However you want to count it. I can't really pull anything out there. So we could allow for one more high, maybe to complete that 5 wave pattern. So early next week we could get a test resistance again at 133.49. So why is that resistance? Well, that's the previous A wave high. That's why it's resistance. No, sorry, 133 is the previous A wave high. The extent of that previous 4th wave. So anyway, a test of 133.49, previous high. We have 134.74. That's a. Let me take that back. The extent of the previous 4th wave of 1 lesser degree again. So we're kind of picking up a few resistance points, and we're working with a 3 wave pattern. So what we want to see is this 3 wave pattern to close out, and a final C wave to close out, and then again same outlook for pound dollar as for euro dollar. An impulsive move lower in a 1-2 pattern to get us started on wave 1 of 3. So a very large 3rd wave down, and this 3rd wave down could extend. Let's say if you take that's the wave 1 and 2, what we've got right now. Oh, you get out of there. If we get a Fibonacci extension of this wave 1, and we project it off that wave 2 high, we get a projection of equality at 114.78. So that's where wave 3 and 1 would reach equality, and we get the more kind of expected kind of relationship of the 162%, let's say where wave 3 reaches 162% of wave 1, so that comes down at 103. So this could be a wave 5 down, could be a pretty serious killer for cable. And then again, once that 5th wave closes out in a year or so, or a couple of years, or 18 months, however long it takes. I mean, this 4th wave took what? Since the 16 low to the 18 high, so it was almost 2 years of a 4th wave, and now we're heading down into a 5th wave. So it could take 2 years again to complete. So we may be 1 year into a 2-year pattern, and once we do reach the lows, somewhere down around equality again, then it'll be time to buy cable again. But that's kind of speaking ahead of myself there. For next week, we want that impulse pattern lower. That's the outlook. Okay, dollar yen has turned out bullish as I expected. It's continuing to run up. There's a couple of ways that we can interpret it, as always, but we seem to be breaking out we have broke out above previous resistances. We have that previous fourth wave there, which we've broken over the last couple of days. So that 111 level has been on the charts for the last few weeks, for the last couple of months probably. The previous A wave low was kind of like a swing high, or swing a swing high in this previous fourth wave and a swing low at that previous A wave. So it was kind of a pivot point really, and we've broken above that again. So that doesn't mean we don't correct lower in the meantime, but it's looking pretty solid for dollar yen as we move up, I think, in a third wave. So this is the hourly chart here. Off that kind of spike low there, we had a 1-2 pattern, and we moved down into down through the degrees in 1-2 patterns. So 1-2, 1-2, 1-2 in green brackets, and now a possible 1-2 in pink is what we'd be looking for next week. So it's kind of like the corollary of what's happening in the Atlantic pairs. So this pair it's looking bullish. Well, it has been bullish. I've been bullish on it long enough. But if we get a further impulse, lower degree impulse pattern here, we could be talking about a wave three of three. So 4 degrees of third waves, pushing the price higher. And I had that kind of longer term target that I've been working on in a large C wave up. It's a long way off yet, but the minimum target was 125 in this large kind of 3 wave pattern higher. So we're getting started on that, and we'll see. We will see next week if we get that further impulse pattern higher. The move, I had thought that this was breaking out into a further 3 wave pattern, but the fact that we've moved higher again today, and we've got a nice 5 wave move up, is turning bullish earlier than I expected. Okay, so the outlook is for some sort of a 3 wave correction off this eventual wave 1 high, and then a move higher again in a third wave. Okay, so stock market, I have my hands up. You know, I had been expecting this 1-2 pattern to let's say reveal itself again over the last month. It never happened. So this has turned into a most likely count as an ABC, with the caveat that we may be either failing in a 5th wave, which would allow the bear market to really take force over the next 6 months and pull the economy down with it, or we could be heading down into a C wave. I would prefer, at this point in time, I would prefer a break to new highs, and so that we could call this move up just a clear 5th wave after a 3 wave correction in wave 4. And if that were to happen, well then I'd just jump on my soapbox again and start screaming. But for now, we're going to work with the kind of lower degree bearish outlook for a C wave decline back to meet this previous A wave low. So that'll be around 21,000 again. So even this C wave decline would be a pretty serious knock to the markets. And that doesn't rule out the idea that we could have a failed 5th wave here. The only way that would really reveal itself is if we continue down in 5 waves, that the bear market reasserts itself, and maybe the economy rolls over as well. Obviously along with it. But a failed 5th wave is kind of something that you can only call in hindsight, I'm afraid. Okay, so at least for now, we're looking for a B wave high. There's obviously the idea that a B wave can break to a new high also. But if we do break to a new high, I am just going to go with the 5th wave idea. I think that's more fitting, to be honest. Okay, so let's get down into the short-term chart. I am still calling, I'm going with the B wave idea. So this wave C is of B is unfolding in 5 waves. So there is a 5th wave there. And it's unclear yet whether this is the high for wave 5. For now, I don't like that high as the final high for wave 5, because the move off that high has been, well, fairly corrective, even though we've got a move lower today. I'll change my mind, obviously, if we get a break of support and we continue lower in 5 waves. So the outlook has always been for a move back down in 5 waves to kind of signal the turn down into the either wave C, or if we call this a failed 5th wave, wave 1 of the new bear market. So for now, we're kind of betwixt and between, really, because we don't either have a complete, let's say, extended 5th wave in place, or we don't have 5 waves down in place. So we are just dependent on the action for now. If we're this far into the end of a 5th wave, I think next week will go a long way to clearing us up. At least that's what I hope. Okay, the outlook for next week is to kind of, early next week is to clarify which way we're going to head in the short term. A break of that previous 4th wave support there, the 25,750 level, will point us to the downside immediately. A break of that previous wave 1 level at 25,440 will pretty much confirm it, and obviously then the previous 4th wave low at 24,320 would probably work as a decent support level for wave 1 of C, or wave 1 of 1, if we were going to go with a complete bearish outlook. All right. So for now, it's decision time in the stock market. Okay, let's move into gold on the 4-hour chart. Kind of switched it up today because we've got 3 waves down and we're so close to that previous support there that it looks like that wave 4 is now, or the recent decline has been moved to a 4th wave, or wave A of 4. So we should kind of, over the next week or so, we should be able to see whether this is wave 4 complete, or whether wave 4, excuse my tripping over my own tongue. 3 waves down, maybe wave 4 goes, turns out as a triangle. Maybe wave 4, there's so many different ways that this correction could, it could be complete. It could unfold into a triangle, it could unfold into a flat, it could unfold, any one of 100 different ways. And that's why corrections are hell, really. Okay, so we still have possibly a complete 3rd wave, and maybe even a complete 4th wave, with the outlook for a rally higher in a 5th wave. The 3rd wave idea here is, let's say, we'll run over that. We have wave 1 of 3, wave 2 of 3, 1, 2, 3, 4, 5, wave 3 of 3, wave 4 of 3, and wave 5 of 3. So there's an extended 3rd wave, and now we're moving down into a 4th wave. So let's get into the hourly chart here. The idea right now is that we have wave 3 of C. You can see that's the new 3rd wave high that I'm looking at there. And then we have a B wave triangle, most likely. And we would look for 5 waves down in C. But it also could unfold in 3 waves, and it could also be done right now. I mean, we're at the previous 4th wave support right now. Let's see where the trend channel points us. We're down at the lower end of that trend channel. So we're in a nice area for a turn higher anyway. So I would look for this correction to complete next week. Throughout the week, we've been falling in. Throughout the last, let's say, since last Wednesday week, 10 days or so, 10 trading or no, it wasn't 10, 10 days or 7 trading days, we've been falling off that previous high. I had thought that was a wave 1 of 5. It's now the wave 3 high, and we're moving lower in a 4th wave. So all along we've been looking for a second wave correction. The fact that we've come so close to that previous support looks like we should just bite the bullet and move the wave count up by 1 degree. So depending on how this 4th wave unfolds, it looks like next week we should complete the initial drop anyway, if not the whole thing, and we should move higher again impulsively. And if it does, I mean, if it does move higher impulsively and we create an impulse wave, a nice bullish head and shoulders there to move higher into a possible wave 5 of the larger degree wave 3. So you're looking for a 5th wave of wave 3 to the upside. That'll be up around the 1370 or something level. Okay, let's get into crude oil. Last week I was looking for a possible initial decline to kick off this 3rd wave down. We got an initial decline, but it hasn't unfolded the way. I mean, we rallied back to the highs again, so you know, I think we're still at a turning point, at the cusp of a turning point here for crude oil again. We're kind of failing to break out, and we've tested this kind of upward sloping line again and again and again, and we have broken down. Momentum has completely died here. We're breaking lower to we're creating lower highs. We're creating a horribly bearish divergence at the least. So again, what we would look for, just like the stock market, we want to see 5 waves down and a 3 wave correction to kind of set up an impulse wave lower and a decent opportunity to kind of get in there if you're willing to short the market into a 3rd wave. Okay, here we've had that move down again. Today I was kind of hoping that we would get a little bit of a spike up towards that trend line again. We've fallen short of that, but when we've moved off that high impulsively in the last hour, because I only done these charts about, well, an hour and a half maybe ago. So we may have that 5th wave high in. We're back at that resistance. See that previous 4th wave resistance? That's 1 lower degree. That's the 2nd lower degree of 4th wave resistance. We are just failing to break that and moving, spiking lower off that that level. So next week we want to see 5 waves down and a 1-2 pattern again to the downside. So I would probably go for square brackets here. So we want to see a setup of a right hand shoulder and a 5-3 pattern off that high to indicate a turn back into a 3rd wave, a possible 3rd wave down in crude oil. And if that is a 3rd wave down in crude oil, my oh my, are we talking about a decline back towards the 30 handle again maybe. So we'll see how that goes. Next week we just want that signal to be in place by the end of next week, and then you could, you know, whatever way you play the market itself, that would be your point to start getting ready. Or actually now is your point to start getting ready, but you want to see that price action signal in place before hitting the button. So next week, yes, we want to complete 5 waves down, and we want to get a clear 3 wave recovery to a lower high in wave 2. Okay. How's my sprightliness going? Okay, the S&P is the same outlook as the Dow. I would prefer. I'm not sure if we're going to get it. It would be preferable to just break out to a new high and to call this a 5th wave rather than a B wave, because maybe I'm dying for a bear market, a complete crash in a bear market. I don't know. We are at that 3 previous failures at this 2800 level. So if we fail again at a 2800 level, again we could move into a full bear market territory. It has happened before that a bear market has started with a 3-wave decline, and we just extend and we continue to extend lower in let's say a C wave, and you know, even if wave C, let's say, if it was a wave C of 4, let's say we're to extend in wave C of 4, that would still bring us back down to the 1800 level, with a Fibonacci extension of the 162% extension. So that would bring us back to the 2016 lows. If we were to at least, or at a minimum, match wave A down, that would bring us down to about the 2100 level, and that'd be wave C complete. So I should throw in wave C there, shouldn't I? Yes, you should, is the answer to that. Okay, so at a minimum, I'm looking for a C wave decline. Again, the failed 5th wave idea will not leave my mind, and if that's the case, then we'll get 5 waves lower and a 3-wave correction to a lower high again. So we will get that signal, you know. It'll be kind of ambiguous, but it'll be there. It'll be an impulse wave lower, and again a break of that previous 4th wave, the 1800 level. But that's again a ways out in front of us. For next week, I'm still allowing for that market to kind of extend, maybe in a 5th wave. I have seen, well, the problem I have with my own IG charts is that this is like an amalgamation between futures and the cash. So on the cash chart, you can count 5 waves off that recent high, and we do seem to be correcting again to a lower high. So for next week, let's see if the outlook remains the same. You still have to look for 5 waves lower, and we need to start seeing a break of those previous support levels. So previous 4th wave, 2764, previous 1st wave, 2738, and this wave 3 high, 2675. So we've got space to move down in a 1-2 pattern again off that that most recent high. So that could happen, but I'm not holding out hope right at this moment. My hope has been destroyed over the last month. So let's see. That would be the alternate count right now, that we move down in an impulse pattern off that high. It's still not time to do anything, I don't think. I want to see a clear, higher degree impulse pattern to the downside before we move into kind of action mode on the short side. Okay, so silver is running at a different degree than gold. So silver was late to the party, to the upside, so it's creating a 3-wave pattern, I think, in a 2nd wave still. I had previously thought that this was the 2nd wave low, with the caveat, or with the alternate count, that we would get one more low in wave 2, and that's the way it's played out right now, and we're approaching support again at that 1518 level. So we're looking at you know, if this 3-wave correction is correct, then we are looking at a buying opportunity in silver again for a possible rally in wave 3. And here you can see that wave 1 high, 3 waves down in wave A. You can view this as an extended 3-wave pattern with a breakout to a new high, so it would be an expanded flat that we're looking at here. Would be a kind of a combination flat if you're going to look at this as 3 waves. with wave C now kind of declining in a 5-wave pattern. So it's be 3, 3, and 5. And we are, I think, pretty close to this impulse pattern closing out. We haven't really gone anywhere in silver over the last, even since the wave 1 high. Over the last month, we've gone nowhere. If you're going to take the previous wave 3 high, we're still back at the levels that we were at back in the end of December. So we've just moved sideways for 2 months, more or less. So that's pretty corrective in my book. So that was a series of 4th and 5th waves, and now the wave 1 and 2 holding out, or closing out, let's say. So we should approach a pretty bullish low, I think, next week. We're looking at that 4th wave low at 15.17. So if we got a little spike lower and then a kind of reaction higher, let's say back above the 1540 level again. So you'd look for let's say support to come in, maybe a spike lower, and then a lower degree 1-2 off that low. So that would give you a nice bullish higher low again to kind of move up into wave 3. And that's the outlook for silver. Let's get on to treasuries. It's been a pain in the ass actually over the last over the last 2 months, more or less. We've just moved sideways. It's possible that this is a triangle. I was expecting that this whole move was a triangle in wave 4 with one final high in wave 5. It looks now that we're getting ready for a further leg down in maybe a B wave or a 4th wave. It's hard to know. So it's 3 waves down in A, then A, B, C, D, E, B wave, and then a C wave. So that would create a kind of a complex 3-wave pattern. Let's get to a trend channel there. Can we please? Yes. Complex 3-wave pattern in either wave B, with a run higher in wave C to complete wave 2. That'd be the alternate count, or wave 4 with a run higher in wave 5 to complete wave 2. So wave 4 and 5 to unfold, or wave B and C to unfold. It's one of those kind of crunch moments, let's say, over the next week or so. And if this is a C wave down in wave 4, well, then you want to see that previous wave 1 high, which would be this level here, 119.44. Get out of here. 119.44. That's the internal wave 1 high of this C wave. And I think if we get a break of that A wave high, a break below 119, a break below 119 would trigger this alternate count, let's say, and we would expect a C wave rally, but I'm going to stick with the wave 4 idea for the moment. Let's get to the hourly chart. So we've had 3 waves down in A. You can see that triangle there has completed within those trend channel lines there. That's a B wave high in the triangle, and now we're moving lower in wave C. It should move lower in wave C anyway. My chart isn't updating today for some reason. So for now, we're still looking for a C wave decline to complete either a 4th wave or a B wave, and then one run higher in wave 5 or wave C to complete wave 2. So we're still gonna, if this is gonna hold, if this outlook is gonna hold, well then we're still gonna move sideways for the next, possibly the next month, probably to the end of March anyway, until we can start working on a large degree wave 3 down. and that wave 3 down would be wave 3 in brackets. So okay, you get to the hourly chart. So next week, let's see if we can close out this C wave. All right. Oh yeah, that's it, done. All right. Sprightly enough. Hope you have a great weekend. Thanks for watching, and thanks for being members of the website. And we will see you on Monday evening with well, actually I'll see you later on tonight with tonight's update, and we'll catch up on Monday again, and we'll start a new week. Okay, have a good one. God bless. Bye bye.